Hello, everybody. In today's technical analysis lesson, I want to look at Tesla. I think one of the problems with technical analysis in general is most people refer to things that happened in the past. And what I want to do is take charts of things that are up to date. For example, the chart of Tesla we're looking at here is up to today's date, which is March 20th is today. Yeah, March 20th, 2023. Um, anyway, I just think it's a much better way to look at things, and it's in real time, and anyone could say, "Oh, look at the book I wrote. I'm going to refer to all these examples of these great calls I made 5 years ago." Of course, they don't put in the bad calls. Well, this isn't really a call. We do those over in the trading ideas section of our site. But I just want to give you a lesson here on technical analysis on Tesla. So anyway, let's take a look here, and I will just see what we're looking at. Now, when a market is going lower, okay, it's because there's not enough demand or buy orders to absorb all the supply or sell orders. So the sellers are forced to offer their shares at a discount, and that forces the market into a downtrend. Now, when we get to what we call a support level, there is an adequate amount of buy orders or enough demand to absorb all the supply. And at that point, we stop going lower. So when markets are going lower and they get to support, they tend to pause before going lower or possibly even reverse. So a lot of people ask me, well, gee, Mark, the stock has gotten down to support. How do I know if it's going to break the support and go lower or if it's going to rebound? And of course, there's no 100% right answer, but here's something that you can look at. And this is kind of what we call a descending triangle type pattern. All right. Now, markets go in peaks and valleys. They don't go in straight lines. If you notice here on Tesla, going back to the end of 2021, this peak is formed at a lower price than this peak. We call this a lower high. This peak formed at a lower price than this one. This peak formed at a lower price than this one. This peak formed at a lower price than this one. When we get these lower highs, this kind of tells us something. Well, not kind of, it does tell us something. As time is passing, the sellers are becoming more aggressive. They're more willing to accept lower prices. So a lot of times, if you get this descending triangle type pattern or these lower highs, it's a sign that the support is going to break, because we have to look at every chart through the context of what does it tell us about supply and demand. And when we see lower highs forming, it's telling us that as time is going by, the sellers are getting more aggressive. They're willing to accept lower prices. Now we can see a couple other neat things here too that we can see on a lot of charts. Notice how the level that was support here and here, this is the $210 level, support here and here, somehow mysteriously and amazingly converted into resistance over here. Well, that's really not that amazing and that mysterious. We see it on a lot of different charts. What happens here is we have people who bought around 210 here and over here. And when the price went lower, a lot of these people tell themselves, oh boy, I made a mistake. I shouldn't have bought it. I'm going to get out of this thing. But I'm only going to do it if I can get out at break even, because I don't want to lose any money. So if it gets back to the price where I bought it, I'm going to try to sell it. If we have enough remorseful buyers placing sell orders at the level that was support, the level that was support converts into resistance. And that's what happened here. Resistance is a large group of investors who are trying to sell at or close to the same price. When a market's going higher, like here, it's because there's not enough supply. I'm sorry. Yeah, when a market's going higher, there's not enough supply to fill all of the demand or buy orders. So the buyers are forced to pay a premium. And this forces us up into an uptrend. So support can become resistance. And one of the things you want to look at, if you want to get a little bit of a clue as to whether support is going to break, if you look into the past and you see a series of lower highs leading up to this final sell-off before we get down to the support, there's a good chance that that support is going to break. Because when you have a market where sellers are getting increasingly aggressive or increasingly anxious that they're not going to be able to get the price that they want, they're going to become more and more aggressive, and we're going to go lower and lower. And so this is a sign. You look at this, it's like, all right, well, Looks like we got a lot of aggressive sellers out there. Now, of course, the opposite is true too. We can't really see it on this chart, but if we get the ascending triangle, when we get to resistance, that tells us that there's a good chance that the resistance is going to break. The ascending triangle is just the opposite of this. We have what we call higher lows. Just pretend this chart is inverted, and as time is going by, we get higher lows. Well, if the lows are getting higher, in other words, if the valley formed at a higher level than the prior valley, well, this tells us that the buyers are getting more aggressive. So the important thing about the market is to let the market tell you what to do. Well, we can even see here, here's another example of support becoming resistance. We could see it on a lot of charts. But it's really important to let the market tell you what to do. A lot of people come into this with the thought of, oh, I'm going to do this or I'm going to do that. If you don't let the market tell you what to do, you're pretty much just guessing. Now, what do I mean by this? Letting the market tell us what to do. Well, just say you were lucky enough to buy Tesla down here. Or, well, I shouldn't say lucky because I don't like using the term luck. But say you were skillful enough to buy Tesla down here and it started to go higher. And you're like, all right, this is great. I bought it. It's going higher. Where should I sell it? I bought it at 120. You know what I'm going to do? I'm going to sell it if it gets to 220. I'm going to make $100 on my trader. But guess what? If you're just doing that, you're just guessing. You're guessing that it's going to get to 220. If you let the market tell you what to do, and you look and you say, oh, there was support at 210, there's a good chance there's going to be resistance at 210. So maybe 220 doesn't work. Maybe you're going to go and try to sell around, just say 205, just to give yourself a little bit of room. Now, in that case, guess what? You would have sold it at 205, and now we're back down to 185. Had you guessed and said, I'm going to sell it at 220, well, you would have missed it, and now you were leaving some profits on the table here. So the market talks to us, and the way it talks to us is by how it acts when it gets to these particular levels of importance. It's just a principle of financial markets that some price levels are more important than others. And sometimes we know why, and sometimes we don't. All right, everyone. So that's it. I guess just the takeaways are look for the lower highs. If we get to support, that'll give you a decent idea of whether it's going to break or not. And notice how support can turn into resistance. And this happens because of buyer's remorse. People bought, they start to get underwater, they tell themselves they want out, but they only want to get out if they can do so at break even. So if we have enough remorseful buyers placing sell orders at the level that was support, the support can turn into resistance. All right, thank you, everybody. I will talk to you soon.